Welcome to the Smart Investor Podcast with Portfolio Manager Beyond Dale, the show that takes the guesswork out of investing by bringing you actionable price analysis of the stock, ETF, Forex, and commodity markets. Here is your host, Beyond Dale.
Hello, everyone, and welcome to another edition of the Smart Investor Podcast, where smart investors get their up-to-date price analysis and market information. Markets have stabilized after that whopping 600-point decline in the Dow. We'll take a look at what's happening in the markets and also what to expect going forward, because there are folks that are concerned that the market is currently at a top and we could see decline in prices from here. And I know that makes a lot of folks nervous, because most folks, if you examine their portfolios, it is not diversified. It's all in stocks, 100% in stocks. And if you have a portfolio full of just stocks alone, it certainly is time to be nervous, because these markets can really plunge quickly. Okay, currently the Dow is down some 26 points. As of this recording, it was earlier it was down over 200 points. So at least we have seen some recovery in the value of the Dow. Now, resistance in the Dow is currently at the 26,684 level on the futures markets. On the cash market, resistance is at 26,616.70. And the sell-off last week is very concerning, because it engulfed the two previous weeks, and we saw a huge surge to the downside. And until we can get above, if the market can close back above 26,050, I would say, if it closes above 26,050, that would be positive for the market. But as long as the market remains below that 2650, we are at risk for some stronger declines in the value of this market. And just remember that this market is overextended. We are due for a pullback at some point in time, so this market can definitely pull back. And the surge in the value of the Dow, for especially for you more experienced hands in the market, could not continue just going up and up and up. Only folks who believe in fairy tales will believe that the market will just keep going up and up and up forever. And that's why it's important that you diversify your portfolio. Support in the market starts to come in at 24,667. If we see the market closing below that 24,600 level, the pullback could even be deeper and could even hit the 23,000 level. At this point in time, I would advise, what I personally have done is tighten up my stops under these markets and really looking to take some positions off the table while the market sorts out itself, because we could see quick, rapid declines from here. Looking at some levels on S&P 500, similar situation to what happened in the Dow, where the market sold off pretty strongly last week, and that sell-off took out the gains that the market made in the two previous weeks. Now, looking on the world stage, we had the FTSE starting to decrease even before last week, where the market hit that 7,800 level and started to move to the downside, and the FTSE is down pretty significantly at 7,443. Support in the FTSE starts at 7,288. If the market closes above 7,288, that will be very worrying for the bulls. Taking a look at the German DAX, we see that the DAX is coming up on support at that 12,500 level. the market really starts to stretch below 12,500, again, that would be very worrying for the bulls. So at this point in time, this pullback looks fairly steep, and unless we see quick recoveries, I would urge a lot of caution here with the markets. Looking further afield in Asia, we see that the Nikkei is down also. This sell-off really, it took all or most of these markets to the downside, and we also saw a spike up in the VIX, where the VIX a couple of days ago, where the VIX started the week last week at just around the 12 level, and the market shot up to 18, and this morning it's currently at 17. So the VIX really shot up, and the fear factor really went to the upside last week. So all in all, with stocks, look out, be cautious at this point in time, and look at taking profits on some of our positions. Taking a look on the other market, we see that the dollar index gained last week, gained only slightly. If we had such a strong sell-off in the markets, we would have expected the dollar to go up more, but it really didn't. And that is because the dollar is under extreme pressure, having lost that 92 handle in the US dollar index. And what I can confirm based on the analysis that I have done is that the US dollar has topped out, and it's currently in it looks like it's heading in a longer term decline. The decline in the US dollar is pushing up commodities such as crude oil, where crude oil made a high last week near that $65 region. And this is after oil bottomed out near 30s. So oil is up over 100% from the bottom that took place in 2016. So a pretty strong move up in the value of crude oil. And yes, we could get some pullbacks in the value of crude, but this is a longer term move to the upside, and the analysis is stating that crude oil has further room to grow to the upside. Looking at the value of other commodities, we have the gold market. Gold is trying to pierce that $1,400 level. If we do close above $1,400 in gold, that would give the bulls extreme confidence, and we could see a move into the $1,600 handle. So gold looks like it wants to restart its bull market move, and that's why I believe gold is definitely something that I'll be looking at for some price movement in the next couple of months. Gold market is really poised to make strong moves to the upside. Taking a look at the euro currency versus US dollar. Again, the US dollar is on a retreat, and the euro topped out at $1.25 last week, and we could see further gains in the value of the euro. So all in all, folks are panicking, I know, but you only panic if you are not protected. First step in protecting yourself in these markets is to get diversified. Diversified means in different asset classes, so that all your eggs are not in stocks alone. You can diversify into gold, different commodities, for example, crude oil. Just have a diversified strategy. You can even move some money in cash if you are not comfortable. That is step one. And also step two, with the stocks that you do have, make sure you have an exit strategy. Too often, folks buy stocks. For example, they buy a stock at $50. The stock is currently now at $250. And the market starts to pull back. And instead of taking profits at some point, for example, $200 point or $210 or $220, they allow the stock to come all the way back near to the $50 point where they bought it initially, and they haven't realized any gains in the stock. So if the market really starts to get turbulent, it will be good to look at different positions that you have and look at taking some profits off the table. Okay, thank you very much for listening to this edition of the Smart Investor Podcast. We'll be back here again tomorrow with some up-to-date price analysis of the markets as they occur, especially in these turbulent times. Thank you very much for listening. I hope you have a wonderful day.